Hey, what's up, guys? Good morning. It is Tuesday, May 3rd, 6:30 a.m. Eastern. So, mind you, the market opens up in 3 hours. So, obviously, a lot can change between now and then. But I do want to show you guys one trade idea here that I'm looking to work today. Trying to work the idea that over the next few days, we could see a little bit of a bounce here in the market. Now, obviously, the overall market is bearish. So, my major game plan is to short the bounces. But again, I do think potentially into the Fed and then into Friday, we might be able to get a little pop here. I know we're oversold. If you look at the put-call ratio, as that spikes towards 1, folks are getting short, and I do think a lot of everything is priced in. So, in terms of the idea I'm looking for here, for starters, I think you want to bail on any idea that we're going to trade higher into Friday if we close under 40.50. So if you make a new low and we close under 40.50, I think we're going to see lower prices into the end of the week. So the key here is we got to hold above 40.50. But the trade that I would like to work here, guys, is the unbalanced put fly. So we'll go in May 6 expiration, and then on the put side of the chain here, go to the 40.50 put. You're going to right click. We're going to buy. Right? Scroll all the way down to unbalanced, and then grab the unbalanced butterfly. So we got the unbalanced butterfly. We're going to look at this just on one contract, give y'all a sense of the risk versus reward here. All right, so with these unbalanced flies, you're going to see 1, 3, 2. So some form of that. If you want 2 contracts, it'll be 2, 6, 4, etc., etc. But we'll go 1, 3, 2 for now, and I want to go $10 wide. So for the top put, we'll go 40.60. For the center strike, we'll go 40.50, and then we're going to go 40.40 for the bottom put. All right, so 1, 3, 2, 40.60, 40.50, 40.40 put, and let's just say we're going to buy this for $2 of credit. All right, so negative $2. We're trying to buy it for $2 of credit. So check this out. Now, in terms of the max loss, max profit on the trade, best case scenario, worst case scenario, it's pretty solid. You're risking $800 to make $1,200. So to open this trade, you got to front the $800. But what's a little bit more likely here is that if the SPX can simply finish the week above 40.50, this butterfly is going to expire worthless. So if we can buy it for $2 and it expires at 0, we'll get to pocket the $200 of credit. So that max profit of $800, that's going to take place if we can pin Friday right at 40.50. So the unbalanced put fly, guys, it's like a put credit spread from the perspective of, all right, we got the 40.50 center strike, and if we can close Friday above 40.50, we're going to pocket the $200 of credit. So it's like a put credit spread with a built-in, butterfly here. So there's a little bit of that pinning potential. So that $800 max profit, or close to it, you would get that should we close Friday right about 40.50. So it's a put credit spread with the potential for a pin. What's a little bit more likely here, if we throw this trade up in the Analyze tab, right, and we look at this on 132. All right, so 132 with $2 of credit. Let's just say we could grab this today. My risk management game plan would probably be to want to close this trade if we were to close today or tomorrow under 40.50. So you fail the bounce, you take out yesterday's low, you make a new low. That's where I'd want to axe the trade. So in terms of risk versus reward, as we know, if we can close above 40.50, right, we'll get our $200 of credit per contract. If we can close Friday just about at 40.50, we'll make closer to $800 per contract. But if we're going to close this trade on a move under 40.50, well, say that happens tomorrow, we're only going to lose about $250 per contract. So the way I look at it is, I'm going to risk about $250, maybe $300 per contract to potentially make either $200 per contract, or if we actually get the pin, you're kind of risking $250, $300 to potentially make $800. So, as you can see, you can have a little bit of flexibility here. You could even choose to hold this down to, 40.20, and you're only down $330. So you compare that to the $200 of credit you could profit on, it's still a really good risk reward. But that, guys, is the game plan I'm looking to work here. And again, a lot can change here between now and the open. But I think the key is we're going to cut that trade loose if we fail to hold above yesterday's low. That's the thinking. So, again, it's just an idea. It's what I'm looking to do. But I do think there's some potential here. So in terms of the position size I want to take, and mind you, I get a few other trades open. A few trades like this. So what's awesome about the SPX, obviously, is you got Monday and now Tuesday and Wednesday and Friday expiration. I think we're going to get Thursday at some point. So I did a few of these yesterday for the Monday expiration. And I think I was going down here at like, 40, 50-ish with the center strike. So on the bounce into the close, that's bringing in some decent profits. I've got one for today's expiration. I've got one at 4,100. So these could be pretty solid here, guys, pretty solid. But for the Friday expiration, what I am thinking here, and you can see I'm also bidding on one at 4,000. Not too sure I want to get that. But for the 40-50, 40-60, 40-40, I'm probably going to go 396. $2 a credit. Right? So if I analyze this trade, and I look at this on 3 contractos, down at 40-50, I'll be down about $800. I am comfortable with that. And if we explode here, it's going to take home about $600. So let's see, 396, $2. Now I won't get filled here before the open. And like I mentioned, guys, a lot can happen between now and 9:30 over the next 3 hours. So I might cancel this trade. The market might, gap up explosively. We might be down 1% before the open. So again, this isn't advice. This is just what I'm doing and showing y'all at the same time. So I'm going to bid for $2. I'm going to try to grab that on 3 contracts. And we'll see if that gets filled here after the open. Now, obviously, right, if we're trading much higher before the open, I'm not going to get filled at $2. I'll have to either cancel that trade or replace the order depending on where we're at the open. If we nosedive here, I'm probably going to cancel that trade because then you get the potential to potentially snag that for maybe $3 a credit. So you get a better risk reward. But there is just an idea, guys. A 40-50, 40-60, 40-40 unbalanced put fly on the SPX for May 6th, Friday expiration, with the idea that into the Fed and post-Fed, we might get a little short squeeze here, and we should hold above yesterday's low. So there you have it, y'all. Outside of that, in the Mastery, we are trying to short the next bounce here. So we got sell signals on the S&Ps on everything. The QQQs, the IWM, basically every sector, XLK, the semiconductors, the industrials, healthcare, and then even a lot of your recent leadership. Healthcare being one example. Looks pretty poised over here, then it falls apart. I think materials, another great example, XLB, again looking pretty poised. That kind of falls apart, fires a daily squeeze short. So you go from buy signals to sell signals overnight. And then the other thing we're noticing is there's just a real lack of, call it honey badgers. XLP is another example. So XLP was kind of like the last man standing here as far as a good-looking sector, but that falls apart yesterday. So then you got names like Pepsi, buy signals to, minus 2 ATR. Names like Procter & Gamble could get a little bit suspect. Names like Walmart. So we're noticing just a huge lack of good structure, holding good structure in terms of the upside here. We took a small loss yesterday in McCormick. You look at this on Thursday, it's picture perfect. Like everything is lining up here for a nice push into 2 ATR, but then it falls apart. So in terms of the upside, the only good-looking thing that's on my radar right now is natural gas. So the major game plan we're trying to work is shorting the bounces, mainly in the indexes, because I think we got way more downside. Again, I do think we can pop here for the next few days. So we'll try to make a little bit of money on that idea with the unbalanced put fly. But I do think you got way more downside. You got a 3-day squeeze here on the S&P futures. We're at major support. This hasn't even fired short yet. So you take the idea that a good squeeze once it fires, that move can typically last for 5 to 8 bars, 5 to 8 3-day bars with a squeeze firing short. That can take you much lower. Then factor in we got a weekly squeeze, so that could be 5 to 8 weekly bars. I think we're setting up for plenty more downside, guys, but I do think into the Fed, as we're at major support, with the put-call ratio spiking towards 1, there is the potential here for a little bit of a bounce. I'm not going to buy out the money calls. I'm not going to get super aggressive. I think something like the unbalanced put fly gives you a little bit of flexibility. If the market explodes, we're going to pocket the credit. If we trade a little bit lower, we just need it above 40.50, and eventually we'll get our credit on Friday. And if we can close around or at 40.50, we get a pin, then it turns into a much bigger trade. And then if we roll over and dump under 40.50, we can cut it loose and keep the risk nice and tight. But there you have it, guys. One trade idea that I'm looking to work today. So for those of you in the mastery, we'll probably get this posted, again, depending on how it all unfolds, at some point this morning, this afternoon. But I hope you all find that helpful. Best of luck here today. If you haven't already, go on ahead and subscribe, and I will talk to you next time. Hopefully recapping a nice SPX trade here. We shall see.